Welcome to SobleCo Insights. In this session, we'll be discussing employee retention credits. Hi, my name is Muniz. I'm the partner in charge of assurance practice at SobleCo. With me today is Doug Finkle, a director in SobleCo's tax practice. So, Doug, employee retention credits, ERC, ERTC, whatever phrase we're going to use, I want to make sure everybody knows what we're referencing here.
Yeah.
Employee retention credits have been around for a little while now. You hear about them a lot. You hear about them. We'll talk about. I'm going to ask you a question about commercials later on. In commercials, I hear about them from all the tax people talking about them. I read articles. It's a lot out there, and I'm sure companies are sitting there saying, I'm hearing this. Should I be doing this? Should I not be doing this? So let me just start off from the start. What companies are eligible for retention credits?
Sure, and this is probably one of the easier qualifications for the employee retention credit. Any engaged business engaged for profit is eligible for the credit. In addition, nonprofit companies are also eligible for the credit. The government views nonprofit agencies, program services, and grants, and the money they get from contributions to be considered a qualifying business for purposes of the credit. So that's a very easy one that many companies can qualify for this credit.
Now, I don't know if you're going to get into it on my other questions, but it put you with nonprofit, and I was just looking over at Nonprofit Financial, and they are actually paying back their PPP loan because the grant money they got was covered the salaries, and the PPP was related to salaries. So I imagine there's similar considerations as it relates to nonprofits getting grant money for salaries and then getting ERC or ERTC. How does a company determine or organization determine if they qualify for the retention credits?
Sure. There's basically only two ways a company can qualify for the credit. And the rules are slightly different for 2020 and for 2021. The credit basically ran from the end of March of 2020 through the third quarter of 2021 for every company except an employee's, what they call a recovery startup business, was allowed to take the employee retention credit for the fourth quarter of 21, and that's a company that just started in business on February 15th of 2020 and had less than $1 million of gross receipts. But as far as the qualifications go, the rules for 2020 was that if a company had what they called a significant decline in gross receipts, and how they defined that for 2020 is that if you compared any of your quarters in 2020 to a similar quarter in 2019, and you had a drop of more than 50%, then you qualified for the credit. And you would continue to qualify for the credit for 2020 until your receipts returned to 80%, and then the quarter after your receipts turned to 80% of what it was, then that quarter you would no longer qualify for the credit. 2021, they changed the declining gross receipts a little bit slightly to make companies more eligible to qualify. So for 2021, the significant declining gross receipts were defined by comparing any quarter in 2021 to a similar quarter in 2019, and if you had more than a 20% drop in gross receipts, then that company would qualify for the credit. So those rules were, somewhat similar but slightly different. And the reason they're always comparing the quarter back to 2019 is that was before COVID hit. That's why they're always going back to what your receipts were before COVID and what they were sort of during the COVID pandemic. The other way a company can qualify is what they call a government shutdown. So what the rules say is if you were either fully or partially shut down due to a governmental authority, and that had more than a nominal effect on your ability to engage in commerce, meaning business, travel, or group meetings, that's another way you can qualify. And they didn't put in the rules any sales drop measure in that or any quantitative measure, and that's sort of the more difficult one to qualify for if you don't qualify for the significant declining gross receipts test, because it's really a facts and circumstance test. You and I could both argue what a more than nominal effect on your business is. So that second test is a lot harder to qualify. And going back to your first point about the grant money that the nonprofits receive, a couple of the rules that you were that get pointed out is that at first, if you were deemed to have a payroll protection loan, you could not also take the ERC credit. But then they changed the rules during the first year and said, well, You could take out a PPP loan and get forgiveness and also take the employee retention credit, but you couldn't take it on the same wages. So you could possibly get both, you just can't take both on the same wages. So you can get both the full forgiveness for purposes of PPP loans and also have enough left over to get employee retention credits.
And I know that they're going to get this out, and I'm going to ask when I get to TV commercials. You know, a lot of companies are getting, or some advisors are fairly aggressive as to saying what a shutdown or effect is.
Right.
And I'm going to, when I get to, you may expand on that when I ask about legitimacy.
Sure.
But I want to make sure everybody's aware, Doug was not off on his years. He is talking about 2020 and 2021.
Correct.
I know we're in succeeding years depending upon when you're watching this, but you are referring to 2020 and 2021.
That's
And we'll
correct.
talk about how they qualify, and I think that's my next question. I think my company qualifies for the retention credit. Is there still an opportunity to file for claims of retention credits?
Sure, and the answer is yes. You know, on an original return, you would have filed it, if the credit gets filed on your employer tax form 941, not on your income tax return. So you would have filed it on your 941 from anywhere from the, you know, if you qualified for from the second quarter of 2020 all the way up to the third quarter of 2021. But just because you didn't file an original return, you have the ability to go back and you amend the returns as long as what they call the statute of limitation is open and claim these credits. So you can claim them on what's called the 941X. So if you determine now that you qualify for credits, you would simply go back and amend either your 2000, you know, depending on the quarter it applies to, you'd simply go back and amend your quarterly payroll return for either 2020 or 2021. For 2020, you have up till April 15th of 24 to file amended return claims. The reason being is even though the payroll returns are drawn on a quarterly basis, the IRS deems the year, April 15th of the following year to be the following date for all quarters.
Interesting.
Right. So, and then for 2021, you actually have up to April 15th of 2025 to claim these employee retention credits. So there's still plenty of time to do it, not that you want to wait till the last minute. And the other thing that gets a little bit lost that people have to understand is that, and the IRS has pointed that out, if you take an employee retention credit claim on your 941 form, you are obligated to reduce the salaries by the amount of the credit in the year that credit applies. So if you claimed an employee retention credit, for example, on a Form 941 for 2020, and the amount of that credit was $50,000, you have to go back to your income tax return filing and you have to reduce the salaries and wages by $50,000 because the government's argument is you're getting a credit. We don't also want to subsidize your deduction, which seems fair.
You must have read my mind because you see here I wrote amended 1120 and 1065,
Right.
which are corporate partnership returns. And if to your comment, I want to emphasize this and the point of waiting.
Right.
If I determine in 2020 or 2021, I'm going to file the ERC for 2020.
Mm.
If I filed my partnership or corporate returns, and I know there could be other returns, okay, 990, et cetera, or whatever. But if I filed partnership or corporate returns, I have to then go back and amend.
Correct.
And if these returns, 1120S, 1065, flow through to you individually,
Yep.
you now have to amend your individual returns.
That's correct.
So, and I had a client that did that, and fortunately we didn't file the 21 returns, and they had filed for ERC, so I knew what it was going to be, and we have a receivable for that. But if people wait to 23, 24, 25, they could have filed their 2020, 2021, 22, maybe even their 23 returns that have to be, this amendment may have to roll forward, especially if they're carrying over credit carry forward, which it won't adjust, they'd have to pay the difference, but there could be interest that can be applied.
So to your point, one of the big problems with the employee retention credit is the delay in getting the payments out to the recipients. At first, it's been somewhere year. It's not unusual for a client to wait or a taxpayer to wait a year or even almost 2 years to get the money from their refund claim for the credit. The dilemma you get into is the requirement is that you reduce the amount of your deduction on your return in the year of the credit. So a lot of taxpayers, when they're in a situation where they didn't get the credit, but by the reduction, if it was a large credit, by reducing their income, they end up owing a significant amount of tax and not having the cash to pay it,
Right.
which left the taxpayers with one of two choices is file the income tax return and pay as much as they could, or just file their return and basically get a tax bill from the IRS and then wait till they get the money from the employee retention credit to pay off that tax liability. So that was a big problem.
That's dangerous.
Yes.
I had a client say to me, when am I going to get my ERC back?
Right.
And I said, well, you see this, it could be this, or
Right.
you see how wide these arms are, it could be this. We don't know. We try
Yeah.
to call the IRS, but there's nobody at the IRS getting in contact with this.
Correct.
So it is difficult.
Yeah.
All right, so, you try and listen to TV, try and fast forward through commercials, but you hear these commercials on TV advertising for business to claim these retention credits, or people getting emails from companies. What's the legitimacy, or are they legitimate? What's with these?
Sure. So I think probably everybody's heard those. I've heard those commercials at least 15, 20 times where they say, hey, you can get a refund, you can go online, we'll qualify you in 8 minutes. So the IRS recently came out with a notice basically saying, be careful, because because these a lot of these credits and these boutique firms, if you I would call them that are specifically doing these credits, a lot of them are incentivized to get credits or make them as large as possible, because they're getting generally their charge is a percentage of the refund, as much as maybe 10, 20%. So there's a big incentive to sort of push the envelope at the time. So the IRS reminded the taxpayer, or the client, taxpayer that's claiming the credit, that it's ultimately your responsibility, and if there's penalties and interest involved and you don't qualify for the credit, that you're going to wind up having to pay it. So you want to be very careful and make sure that you do your due diligence in going out there and looking at the reputation of these firms and analyzing what they're doing to see if it intuitively makes sense to you in claiming these credits, because last thing you want to do is wind up getting a tax bill for the IRS for not only removing the credit, but hitting you with penalties and interest.
So it's legitimate that they could be producing numbers for you to file a claim. The legitimacy of the claim is yet to be seen. You don't know. You don't know. It could be 100% legitimate. It could be that the IRS deems it not legitimate. And
right.
I know that there have been a bunch of accountants that have taken the position that we as CPAs are not to be accepting contingent fees like this.
Correct.
Okay, you can charge for time spent, but not a contingent fee based on our licensing requirements.
Yep. And in my personal view is where the controversy is going to come in is not on the gross receipts test, because gross receipts test is a bright line test. Either you had a 50% decline in 2020 or you had 20%, more than 20% in 2021. I don't think that's where the argument's going to come if these things are ordered. I think where the argument's going to come is under the second test we talked about, the full or partial shutdown due to a governmental authority that had more than a nominal impact on your business. That's where the controversy is going to come in, because there's no number or whatever. It's really facts and circumstances, and that's where a lot of the audits are going to come in, and the government might say that whatever COVID effect was on your business was less than a nominal amount, and you may argue that it's more than a nominal amount. And I think that's where a lot of controversy is going to come in on the audits.
I have a friend whose client paid the company up front for the estimated claim that they could get, and then when they brought it to their board, the board said, we just don't think we would match the test, notwithstanding what they said, and they couldn't get the money back, what they paid. So be careful with this. And another client who had 800 employees, and the government said you can only have half the people, and I said, well, you could be partial shutdown, and they said, we could be.
Right.
We just don't want to run the risk with it.
Right. It is. It's it's a relatively new law. There's not a lot of there's been no IRS cases or litigation on it. So It really depends on the company's appetite and how comfortable they feel with taking the credit.
So I don't know what you're going to bring up on recent developments. I've heard a lot of things on recent developments. Sure. What recent developments have come out lately?
So the biggest one that I've heard in terms of recent developments is that as part of the infrastructure bill that came out in mid-August, they hired 80,000 IRS agents. And we've been hearing rumblings lately that it's a decent portion of them are going to be, their task is going to be to audit what they call benefits from COVID-19 relief, which will include the employee retention credit. So if you claim these credits, you want to make sure that you have all your documentation and your calculation buttoned up, because you may be selected for audit on these credits.
That's pretty much what I've heard also, putting any politics aside of the number of IRS agents that they're going to have, but those that they do bring in are going to be focusing on.
Correct.
That
will definitely be one of their tasks and focus.
Okay. All right. Well, I appreciate the information. you know, people should be looking into this, but looking into it with caution, I would say.
Yeah.
We're happy to answer some credits and help them with the process, but don't delay with this. So,
Right, and you know, these are valuable credits, so if you're legitimately entitled to them, don't be shy and take them, but just make sure that you should be taking these credits.
Great, thank you.
Thank you.
And thank you for watching SobleCo Insights. Please visit our YouTube channel for additional videos.